Hello again, Brian Martin here with Merit Financial Advisors. Hey, I hope you got a chance to check out my introductory video a few weeks ago. As I mentioned, I'm really excited to connect with some great new Auburn people here in Atlanta. Maybe some of you guys caught the A-Day game back on April 17th. It's a brand new day at Auburn with Brian Harsin and the coaching staff taking over at Auburn going forward. Just as they're transitioning to a new way of life at Auburn under a new staff, we're all transitioning out of the pandemic as we look to reopen the economy and look forward for what lies ahead. Today I want to quickly address three topics that I think are important to all of us: stimulus, taxes, and what that means for investing later this year. Regarding stimulus, we know that the $1.9 trillion American Rescue Plan was implemented by the Biden administration back in March. Within this plan were billions of dollars for additional stimulus payments, COVID testing, and vaccine distribution. This brings to a total of $6.1 trillion in total stimulus that has been implemented since the pandemic began. And that doesn't even include the $2 trillion infrastructure plan that's currently on the table right now. That's a huge amount of stimulus being pumped into the system. For perspective, in 2008, coming out of the financial crisis, only a total of $1.8 trillion was implemented at that time. So this is a massive effort to unleash the economy going forward. Unfortunately, what this also creates is increased national debt. The U.S. Treasury puts our current national debt at $28 trillion. In 2008, the debt was only $10 trillion. So we've almost tripled in less than 13 years. That's not a course we want to stay on. What does all this mean going forward? Well, for sure, higher taxes and likely higher inflation as well. Regarding taxes, we know that in the last year and a half, there's been some significant changes that might affect you now or in the future. For one, required distributions, which used to have to begin at 70.5, have now been pushed to 72. So those of us that are working towards that time will have a little extra time to save. A bigger point to be aware of is how inherited assets from retirement accounts are being handled by non-spouse beneficiaries. In the past, if you inherited an asset from your parents, for example, you had your entire lifetime to take those assets out via required distributions. Now, going forward, you'll have to remove those assets within 10 years, which will vastly impact the tax impact of those assets when you inherit them. If you inherited assets prior to 2020, this new change doesn't affect you. And if you're a spouse beneficiary, this also doesn't affect you. You'll still have your lifetime to take out those assets. But that change for those of us that might be inheriting assets from our parents is really significant, and it's important to plan around that going forward. Additional tax measures currently being discussed include increasing the capital gains tax, perhaps eliminating the step up in cost basis for inherited assets not included in retirement accounts, and higher income tax brackets down the road as well are likely. So when we factor all this together, it's really important to have a game plan when it comes to taxes going forward. The good news, though, is that all of this stimulus and vaccine distribution, again, is going to help reopen the economy, and it does create opportunities when it comes to investments. When we think about last year as the economy changed, the dynamics of how business was done changed significantly with it. Think about all the technology stocks that really have done very, very well in the last year or so as we've become more of a virtual economy. Well, now as the economy is starting to open up again, there's different types of industries and companies that really got hammered last year that are now starting to do much better. Think about value type dividend companies, companies that got completely shut down like travel, hotels, airline, industrial companies. All these companies that really took it on the chin last year are now really starting to improve and provide really great investment opportunities as we look forward. So again, we think this year might be very opportunistic when it comes to investments. If you think about it though, there's still a lot of volatility in the system right now, and it's important to have a plan to get through that. If you don't need money tomorrow, don't worry too much about it. And also don't worry about maximizing performance in this environment. A steady, consistent return over the long term, if that helps you get to your goals, then that's all you really want to focus on right now. Don't be surprised if we see a correction of some meaningful amount within this next year, and really that could be healthy when it comes to the ongoing appreciation of the market overall. In closing, I know we're all really excited to see how the new coaching staff does at Auburn going forward. Hopefully also Bo Nix can finally come into his own and be the quarterback that the team is really counting on. Just like they look to him to lead them through the challenges of a game to victory, it's important to have a quarterback of your own to lead you through the financial challenges of life as well. Maybe that quarterback is you. Maybe that's someone else. Maybe it's time to change quarterbacks for the rest of the game. At any rate, we know that the challenges of life financially will continue to arise, and it's important to have a really strong game plan to get through that and reach your financial goals. If you have any questions or feedback on any of this, please feel free to reach out to me. Until next time, War Eagle.